Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a huge news week. We've got some breaking news about the coronavirus that I do believe is going to send Bitcoin and gold higher this week. The long-awaited resources portal is finally out. So this is the first version. If you want to head over to the website and check it out, search for anything that you or your friends want to learn about, from the basics to the more advanced DeFi things. This is going to be added to every week, and we are going to also make this the login portal for our premium content before we bring out the Nuggets News app in coming weeks as well. So our biggest week since 2017, we had something like 70 or 80 new members this week with all our premium content and posts. I'm going to walk you through a few of those in this video as well. But welcome to everyone that is new to YouTube or to our Facebook group. Very exciting time with so much happening in the world of alts. We're going to talk about a few trades we had as well. You guys know that I do all my trading on FTX now, so big thank you to them. They are supporting the channel. They've got that double discount for you in the description below. And a few of you have been interested in these prediction markets, so I am going to do a tutorial on how they work, and they're going to be bringing out a range of other prediction markets. I'm going to compare those to a few of the others that are out there as well, but be sure to check out FTX. Okay, let's get into the local news, where once again the banks are in the headlines. We shouldn't be surprised, but this time bankers have been turning a blind eye to the scammers, and what scammers have been doing is using their own BSB account numbers and just using any name to fool people. So you might think that you're paying the business name on an invoice, but really what scammers are doing are putting their own bank details down below, and this is something that is not checked for online payments. And I've had a number of people tell me that this has happened to them. So let me know what you think about that in the description below. But I believe it's very different overseas, where that is something that is a fail-safe if the name is wrong. But it's not only the Australian banks. We've got Wells Fargo agreeing to pay $3 billion to settle a staggering scope and duration of illicit misconduct there. So banks up to no good again. We know that Bitcoin is going to disrupt them to some degree going forward. All right, so our local industry here, unfortunately, we did hear that Holden is going to be no more after this year. So withering away, the government gave them $2 billion of subsidies in recent years, and General Motors turn around and say, thanks for that $2 billion, but it's not worth it anymore. So we know manufacturing's been declining in Australia. We're not globally competitive on that front. And this is something that's disappointing. So yeah, I am sorry to people that did have a job there. It'd be nice if they could find another high-paying, high-skilled job, but we know that Australia isn't producing enough of those at the moment. We're very reliant on our agriculture, and unfortunately, this is going to be the worst harvest on record for Australia because of the drought, the bushfires, and then we've had floods as well. So it's not nice. We are seeing the worst of the weather at the moment, and I do wish the best to all our farmers, because I think it's one industry that's really unloved, and we've all got to eat, and I think that's something that's going to really change in the next cycle. I think agriculture is going to be something that does boom. All right, so we've got more articles coming out from the Sydney Morning Herald about how Australia, and WA in particular, is far too reliant on China. The coronavirus is going to impact our tourism and education, but also all our commodities that go into manufacturing things. Now, in Australia, we've seen a lot of local fears. This is just something that, whether you like it or not, this is what's happening. So I'm only reporting on the facts here, but we have seen a lot less foot traffic to all restaurants and retail and whatnot, but particularly Chinese restaurants there. So it is hitting everyone. We've seen other economies tick down, and I am expecting Australia's numbers to tick down as well this quarter and next, or however long the virus lasts. So unemployment did tick up to 5.3%. Everything I just mentioned there, but none of that matters in this upside down world we live in, where the Australian stock market broke out to record highs. Now, in regards to the cash ban, Senator Jackie Lambie, regardless of what you think of her, she has asked for feedback on which way she should vote on this. So if you're Tasmanian, make the time. I've shared this on my personal Facebook page. Head over there and let her know what you think of that cash ban bill. Now, in terms of cash, we have seen China destroying all their cash. We do know that physical money does carry some germs on there. Whether or not this becomes a wider attack front for all countries to make another excuse to ban cash, let's wait and see. But just something to be mindful of if you are handling money. Now, the official cases has jumped up to nearly 80,000 now. Deaths, 2,400. So this has tapered off a bit from about 10% a day growth down to around 5% a day. So that's good that it is slowing, but now we're waiting to see, well, is that number actually accurate? And some breaking news we had that Troy shared with me just before, so thanks, Troy. We had Italy have 79 cases in one day and 2 people dead. So South Korea, now Italy. Why is it that these other countries have had these huge rise in numbers? And this is what I spoke about a week or two ago because of the 14-day incubation period. Now they're saying it could be even 24. By the time that people have traveled, they don't have symptoms, they could have spread it to a lot of people. So I'm really interested to find out who was patient 0 in Italy here. How did 80 people get it? Have those 80 people already contacted thousands of people? And again, I don't want to spread FUD, but this is where it can get nasty really quickly. So we're going to learn a lot over the next week or two about the magnitude of this. Either way, China had a lot of these debts coming due, the junk bonds. So as this article is saying here, this is all coming due at the worst possible time for China. Now, they've injected 5 trillion yuan into the economy, so we know that printing money is the answer to everything for these governments and banks these days. But either way, a lot of those companies are going to either default on their bonds or have to be bailed out by the government, like we've already seen them buy out a lot of banks. Now, China's that manufacturing hub of the world, and we've now got shipping declined to the worst levels since 2009. And this is the data from before the coronavirus hit. So we're now in this world where shipping, manufacturing, it looks like it's going to collapse to levels worse than the GFC, and how the stock market can be at record highs it is absolutely beyond me. And that's what I did my rant video about during the week for those of you that haven't watched that yet. Now, the White House has come out and said that they still expect Beijing to honor the trade deal commitments. So one of the things they were talking about was buying billions of dollars of agriculture from the US, and we know that that is a sector that's really struggling. So Trump hits at a third bailout for ag businesses, promises additional aid and support. We're doing similar things in Australia. A lot of people argue we're not doing enough to support our farmers and whatnot, but this is just this world and this economy that we live in, the business cycle, where if something ever goes bad, the government prints money or the government bails you out. This is why we have all these zombie companies that wouldn't be surviving and without these record low interest rates and all this money printing. So really worrying stuff there as well. Now, James Bullard of the Fed did come out and say that look, we're going to possibly cut rates because of the coronavirus. And he was asked, well, is that actually going to cure anything? And he said, look, I don't know, maybe you feel the symptoms. So once again, if something goes wrong, print money, cut interest rates, apparently that fixes everything. Now, the FOMC did come out this week after their meeting and say that they see that rates are appropriate, asset levels are actually elevated, so saying that, yeah, they are getting lofty, and talking about this tapering of their QE program that's not QE anyway. And this is where I think that markets are going to have a big tantrum. It's going to be pinned on the coronavirus to some degree, but we know that the only thing holding up these markets is all this free money. So if they cut back that money printing, expect the markets to have a tantrum. Now, who bought all this US debt? They've got that privilege as the world reserve currency. But if we actually have a look at who's been buying this, well, as a percent of the total debt, less and less is being held by foreigners. So we know that the banks and these financial institutions are the ones that are coming in and buying these bonds. And it's the game of musical chairs where we just think that everything's going to keep going up because central banks are going to keep buying bonds forever. Now, not only that, we're now hearing that Janet Yellen, this was a few years ago, this article, but we're seeing a similar theme from other central bankers. We should buy stocks in the next crisis. That'll be a good idea. We printed money to buy bonds, government bonds, but maybe we should buy stocks as well. We've already tried buying corporate bonds in Japan and in Europe. Why not buy some stocks too? As you can see here, the yield curves collapsed. I think the 30-year bond in the US hit a record low. But this is the Japanification. If you've been a subscriber for over a year, you'll remember Steve Keen and I did an interview talking about how the world is going to turn Japanese. And all that means is we're going to have interest rates low for decades. And they're just going to print as much money as they can and just hope that it works. And as we see here, Japan GDP versus the balance sheet, we actually did get a little bit of a tick up in GDP. If you believe these numbers, or if all that GDP is simply from the stock market going up. But this is the model that central banks are going to follow around the world. In Australia, they think that, hey, printing all this money, pushing up stocks, pushing up house prices, whatever we can, let's just push the price of everything up, and that'll be good for the economy. So that's their solution. As we can see here, this is the amount of bonds from different grades, and the grey area here is triple B. So if that gets downgraded, they become junk bonds. So there's never been a bigger amount of corporate debt that is one rung above junk bond. And if that gets downgraded and becomes technically a junk bond, that means the pensions funds have to sell them. They're not allowed to hold junk debt. And that is a lot of money. We're talking $2-3 more trillion that's going to look to sell, and there's not going to be any buyers there staring at that $3 trillion sell order wanting to buy. So this is again a trade that could be setting up. On eToro, you can trade HYG. That's a high yield bond ETF. So again, these are the concepts I like to tie together for you guys. If you think it's going to go up and it's going to be a bubble and central banks are going to buy it all, you can trade that and go long. If you think that this bubble is going to pop, you can short that. So they've got that practice account over at eToro. You can practice. But I just think these lifelong skills for when we have this financial event happen, you want to build those. Now, the ECB have been buying corporate bonds, and what they've done here is help finance Tiffany's acquisition. So they actually made France's richest man even richer. They printed money to buy bonds to give him more money so he could buy another company. Now, how insane is that? That they're just literally helping the rich get richer. Now, all these other countries are doing the same thing, issuing their bonds, and just 2 years after the bailout over in Argentina, we're now being told that Argentina's debt levels are unsustainable. So, who would have seen this coming? Countries that have continually had hyperinflation, defaulted on their debt several times in the past, they issue these bonds, everyone rushes in to buy them and thinks it's great, and 2 years later, we're probably not going to be able to afford to pay you and pay those yields. Absolutely insane how much of a joke and a game this bond market has become. Now, once again, in Lebanon, they know that these bonds are coming to maturity, time to pay out. And the bond yields have absolutely soared because nobody wants to hold these bonds. They want to sell them because they know that they're useless. Absolutely nuts. Now, here we see some 3 interesting charts. So this is the S&P index versus a weighted index, where it puts less stock, pardon the pun, in the largest 3 or 4 stocks. So as you can see here, Apple and Microsoft are really holding up the market. Back in 99, it was General Electric and Microsoft. But basically, it's these large cap stocks that are getting all the money sucked into them. And if we have a look at the actual relative performance, or the rest of the stocks, apart from those ones that are performing well, we see that they're actually down. The majority of stocks are down. Earnings are down. Things aren't good. It's just the big tech stocks that have gone into a bubble, some would argue, that are holding up the entire market. This is a chart of short interest, once again, dropping to record levels. All this means is that there's fewer people than ever that are betting the market is going to go down. But at the same time, we have the smartest investors, love or hate Warren Buffett, Berkshire Hathaway. Look at their cash levels. They're near record levels of cash. So we have this condition where stocks earnings are going down. The majority of companies' share prices are going down. Yet we have a record number of millionaires, and everyone feels really wealthy because, the same as in Australia last year, or a couple of years ago when house prices were really high, we had a record number of millionaires. And then house prices go down and we had a record loss of millionaires. So it's great on paper when everyone feels like they're wealthy because of all these property and stocks that they own in their portfolio. And in this world, we actually got retail investors beating the hedge funds. So you've heard these stories of people that are rushing into Tesla and Apple, and they're outperforming these fund managers because they're taking super risky behavior. Again, at a time when smart investors are pulling money out. Warren Buffett's going to cash. Smart people are going to gold. Whatever it is, Bitcoin if that's what you want. But getting out of those assets that they see overvalued. And we've seen record amounts of inflows into those bond markets. So this is the most important chart in the world, in my opinion. This is the chart of negative yielding debt that I said would bottom out around 11 trillion and tick back up. It's going to surpass that 17 trillion mark. And I think that's when gold can even get close to passing its all-time highs. And I think Bitcoin is going to catch up, really rocket, if negative yielding debt starts to tick up again. Now, it's become very obvious in Australia. Our dollar has lost 20% of its value in the past 2 years, 40% in the past 10, and gold's up to $2,500 an ounce in Australia. So if you've followed our videos, Australian mining stocks are killing it. Bitcoin's at $15,000 Australian. I hope you guys are doing well, and I hope you enjoy tying this all together, this education around how finance and economics does work. Now, I believe there's a bigger opportunity now in the GDX in the US, so the US Gold Miners Index. This has been a pretty strong performer over the past year or so, but gold in US dollars is just breaking out, and these gold miners have lagged a little bit. So once again, this is a trade that I did a bit of a write-up on, something that I think can perform extremely well. The Gold Miners Index, if you don't know how to trade and get exposure to these ETFs, I have done a tutorial, and I will link that down below. I think this is the last week we've got our $100 free Bitcoin sign-up. For those of you that do open an account with our sponsor eToro. So take advantage of that. The other thing that I would encourage you all to do, if possible, if you can take control of your own wealth, that self-managed super fund, get on the phone and take advantage of that free consultation with Mike and the guys over at New Brighton Capital. Set up your own self-managed super if it is for you. You can structure it yourself. If you want to go defensive, maybe you want to go into stocks and you think the bubble's going to go bigger. But know what you're invested in your retirement fund, know how to change that, and as I've said before, take control of your own finances there. All right, so speaking of finances, we've got Fidelity acquiring a stake in Hong Kong crypto firm BC Group. So it's the big names. They're getting into this space. Everyone wants to get exposure to crypto and be able to trade crypto, invest in crypto. E-commerce giant Shopify, most of you have probably seen the Shopify plugins, has joined the Libra Association. So we've seen a lot of people leave. Maybe Libra announced this week they've got their own coding language that they've written for this project. So maybe it is finally making some progress, but I think it's regulation that's going to stop Libra from launching anytime soon. BitGo have acquired Harbor. So BitGo is a custodian and insurance platform. They now want to get into the world of security tokens as well, become, I guess, like a stockbroker that holds security tokens as well as traditional crypto. Now, Binance have been trying to branch out into that space. This week, we did have the news that they are launching those crypto cloud services where you can launch your own exchange, a bit of a white label type service there. But yeah, trying to take on Amazon and Google with Binance Cloud. We also got the news that Binance are not under the jurisdiction of Malta. Now, Malta's that hub where everyone went to because they thought Malta was going to be a crypto haven, but Malta haven't been giving out these financial services license to launch these security tokens exchanges like everyone thought. So I'm not sure where everyone's going to go off to next, maybe Seychelles or one of these other tax havens. But yeah, new prime minister there. It certainly looks like Malta isn't turning into that crypto haven a lot of people thought it would be. Coinbase has become the first direct Visa partner here, principal partner. And this does mean that they can issue Visa cards. So this world of crypto and payments is so competitive now. We've actually got Visa, the head of Visa, coming out and saying that he sees a bright future for crypto. So even Bitcoin, mentioning Bitcoin specifically. So very much a change of tune from a little while back when these guys saw Bitcoin and crypto as massively the competition. So now they can partner with Coinbase. Now they can make money off issuing cards and fees. All of a sudden, they're seeing crypto in a more positive light. We've got Sweden testing their Europe's first central bank digital currency there. We know all the other central banks around the world that are trialing it. Brazil is ready to launch their near instant payment system in response to cryptocurrencies. So this has been one of the reasons that I don't own XRP, because I thought that the banks would bring out their own payment coins, and it was just such a competitive space. We'll get to some XRP news in just a second, but we've got smartphones now integrating crypto. Once again, Samsung are proving that they're loving crypto. We did see Engine launch their platform this week, their main platform on top of the Ethereum blockchain. I'm very bullish on Engine and gaming coins. We also saw the news that people have been buying millions of dollars worth of real estate in gaming projects like Decentraland and Sandbox, I believe, was the other one. So one of my themes for 2020 was gaming. It's awesome to see that is exploding, and those projects that I own, and you guys know my portfolio, know that we've been doing really well this year already. Bitcoin Cash is another one of those that's in that payment space. Now they're at risk of another chain split here because of the protocol upgrade they want to do that sends 5% of the block reward, instead of going to the miners, they want to put that in a development fund. So the main client there, Bitcoin ABC, is disagreeing with the other client, Bitcoin Unlimited. I did reach out to Roger Ver and have a chat to him. He did agree that this isn't great and he doesn't want to take sides here, but I think it would be pretty devastating for Bitcoin Cash to have another hard fork, and what would you call them, and the community gets smaller again. It can get attacked, 51% attacks because the hash rate drops. So I think they have to come to a resolution, or it could practically be the end of that project there. A project that has had a successful hard fork is Cardano, all ready for the main Shelley launch. That is something that we've been waiting for 2 or 3 years now. So those of you that are holding Cardano, I know you're excited about this. It's all sort of coming together. We have to wait to see how bug-free it is, how it all works. But all that research that has been driven by the foundation, this is something where I think the community is really tight-knit, and that hard fork did go successfully well. So well done there, guys. All right, so into a few of the DeFi Ethereum projects here. Enigma, which is one of my favorites, did settle with the SEC. So they were only charged $50,000. They did a $45 million ICO a while back. We're waiting to see more details. Was it a $500,000 penalty? I thought I read $50,000 first time. Either way, we're waiting for more details about if they're going to have to refund just US investors or all investors from the ICO. They are looking to launch their own mainnet for the security token that they want to upgrade to, so a possible token swap coming up. We just don't know. I did reach out to the team. They're sort of in silent mode at the moment, working through it with their lawyers about how's the best way to go about this to go forward. But we know, for example, that something like EOS got charged, and it was a bit of a slap on the wrist. So certainly not an end for the project by any means, but bad in the short term. Hopefully nothing to worry about medium to longer term. Now, Gemma Green from Power Ledger did come out as well this week saying that Aussie blockchain startups are telling the government that its tax laws are stifling ICOs. And I completely agree with this. It's something that I spoke to regulators about in my time when I was a board member with Blockchain Australia, and I did work with government regulators. I still do keep in touch with the guys at the tax office, for example, and share feedback with them. But you think about it, you're an ICO, you raise all that money, you've got a big tax bill, then the price of Ether drops. How do you work out your taxes? Are you paying staff in tokens? Are the tokens not listed on exchange? What's their value? So many things that are just making startups say, you know what, let's go over to Southeast Asia. It's way easier. Let's go to Cayman Islands, Seychelles. And that's just a fact. And the number of startups we've seen in the past 2 years in Australia in the crypto space has really dropped off for this reason. Now, one of the projects that I did support and I am an advisor to is AgriChain. And this is one that has been progressing slowly in the background, but they did get $6 million invested into them from Cornerstone Growth. Some fantastic quotes. I recommend you read this article saying that this is one of the most exciting prospects he's seen in agriculture in a long time. This ticks all the boxes in the ag sector. Very unique platform. It's the first of its kind. So really positive feedback from people in the know in the industry there. Look, we know that AgriChain have got trials with all the big commodity brokers and the logistics companies. And these things take time. These huge multinational companies, nothing moves fast. Everything has to get signed off through boards and whatnot. So one that, yes, I know it's frustrating. We do have to be patient with them. But $6 million is really showing that they've built a working product. They've got a good team. They're the things that I look for long term. And I don't expect these small cap investments to, make you rich in a year or two. These, for me, are investments that should have that sort of couple of year time frame. 5 years out, I've already got the revenue coming in the door. So look, really proud of the guys there. Great news. Okay, so over on to EdCon. This was one of my favorite conferences last year. This is where I discovered how big synthetics was going to be. We got into that one at 4 cents before it boomed all the way to $1.40. EdCon 2020 cancelled over fears of the coronavirus. So not great there. Let's see if they reschedule this or whatnot. But always disappointing. That was an awesome conference. I was looking forward to watching all the videos from that. Now, Kyber has been booming lately. I've got my Kyber t-shirt on. One of the projects that we have been covering with our premium research reports and analysis. You see here, this is the format of the 5 fundamentals report that members get emailed to them each month with a couple of pages on all our favorite projects. But it was back in October last year where I highlighted why I thought this one was going to boom. They are making the switch to a sort of staking model and new token utility. Now, I do look for projects that can go up 1,000%, and it's insane to think that that is even still regularly possible in the crypto space. Now, when I say regularly, this might only happen once a month or once a year, but that is still better than any stock market investment. So doing the technicals, doing the fundamentals, doing the research and being rewarded, this is up 300% since October. And yeah, I do think it can continue. So I hope you guys did get in on KNC there, and a project that's really important to the DeFi system. But this is one where the price, the liquidity on Kyber, the price went down during this flash crash. And this was how BZX was actually exploited. So they shouldn't have been using Kyber as a price feed. Kyber is a decentralized exchange. So when you sell a lot of a token and you push the price down because there's not a lot of liquidity, that's going to cause these errors to happen in these other contracts and these lending platforms. So I did the interview during the week if you want to deep dive into what happened there. But basically, good news for Chainlink, because BZX are going to look to integrate Chainlink for their price feeds, so they no longer have to rely on Kyber, which is something that they probably shouldn't have been relying on in the first place. As I say, Kyber is a decentralized exchange. It's not a price feed project. So we saw a lot of FUD around this week. Is it the end for DeFi and flash loans? No, it is just bugs we have to iron out. Things go wrong in the move fast and break things space. But watch that interview for more details there. And disappointing that they did say they find this vulnerability a little while back. The team said that they were about to release a public statement and whatnot. But this is certainly one that has divided the community. I just hope everyone can work it out. And if you want to know the best DeFi platforms where you can earn those interests on your different coins, that is now one of our Resource Hub learning units. So head over there and read about what we think are the best platforms to earn that interest on your coins. Probably one of the positives to come out of all this was the fact that Nexus Mutual, a project that I'm really loving, paid out their first insurance, this decentralized insurance platform that has begun to insure all these DeFi projects. And if you want to know how to get your hands on that one, it isn't on any exchange at the moment. You do need to become a member. All right, Tim Draper has invested $1 million into a digital core project. So if you follow the channel, you know that this is one that I do like and I have been covering since 2017. This is Aragon, so decentralized autonomous organizations. DAOs have become a flavor of 2020. This is one that we've been researching. I don't want to say too much more other than members. We will do a deep dive in this one for you soon, but I think it's one that you do need to be bullish on for 2020. Okay, so the Block have put out a great article about Peter Thiel backing Layer 1 and beginning that mining in West Texas. So we hear these stories that China controls 60% of mining. That's not true. All they control is the mining pools. That actual hardware can be anywhere around the world. But now we know Russia want to get into this space. America, it's almost going to become another part of the trade war. who can get this industry and make the most money off the Bitcoin network. It's a multi-billion-dollar industry. Of course, the US are going to want market share. So all this is coming together, the perfect storm for the biggest super cycle ever. And I think that's what stands in front of us. More of these metrics, I do just want to share a couple of metrics quickly. So this is one from Glassnode. The number of Bitcoin addresses continues to rise. It's breaking out to new all-time highs. Bitcoin reverse risk. So this gives us a general indication of when prices might be overheated versus undervalued and a good time to buy. And we are once again down in this green zone, which has typically marked the bottom of bear markets and when those bull markets are about to start. And one from Sentiment here, they said, don't be fooled by this selling action recently. Our price and NVT metrics, which have to do with the volume that's being traded versus the value of a coin, they're starting to tick up into the green after being red for months and months. And during the bear market, they remained red, then they turned these oranges and then green again before we had the big bull. And back here, orange, greens, and that was the bull market. So everywhere I look, fundamentals, technicals, on-chain data, sentiment, market psychology, 100 new members in our group over the past 2 weeks, I think the stars are aligning for this bull market. Now, in the short term, that doesn't mean that things can't go down. And this was something I did a write-up on for members this week. When everyone was talking about how the Golden Cross was going to take us to the moon, I spoke about how we've actually had these 10, 12% drops in the past. That would take us back down further. We did go a bit higher, but we actually got that 12% drop. And this is where, if you're patient, you can get these huge returns. So this was, again, one of those trades where, we're not a trading group. I do the education. I tie it all together for you guys to paint a picture to help you learn. But this is one of those trades where you might make it once a month, once a year. Huge returns over on FTX, having a plan, sticking to it, executing. Really pleasing stuff this week. So let's head over to the charts and let's start on the weekly here, high time frame. Everyone is starting to talk about lower levels, but look at that. That is just a perfect bull flag on the weekly time frame. If it closes anywhere near here or even has another week to the downside, it still would not be the worst thing. Everyone was asking for a retracement. We kissed the outside of this Bollinger Band. All we're doing now is mean reverting. Once again on the daily chart, really healthy stuff. We can see these wicks every time we've broken down, it's been brought back up. Let's just zoom in and have a look at that head and shoulders pattern where we came up here and tested that shoulder height once again. And that was the level that we were looking at for that short before it really plunged there. So guys, I'm really happy. I think everything is healthy at the moment. Some altcoins are finally playing by their fundamentals, which is nothing more pleasing to see. Take advantage of that $100 free Bitcoin on eToro. It's the last week for that. Double discount on fees over at FTX. Free resources for all your friends and family over at the new website portal. I hope you guys have enjoyed this video. Please smash that like button. Subscribe if you haven't already. Share this video around, and I'll talk to you again soon. Cheers.